Hello everybody, welcome back to the channel 0 to a Million. On this channel we're going to be showing every single stock trade starting at $0 all the way up through $1 million. Every Friday I put in $850, I invest 10% of it, so $765 I invest every Friday. 10% of it, $85, I save and put in the cash fund here. We've got $2,100. Now last Friday was a little bit different. I added an additional $700 to the $850 I traditionally do because I wanted to buy a couple extra stocks. So there are times where in a week I'll invest a little bit more, but traditionally I just count on a steady $850 every Friday. Go on the maximum here. If we click that, so January 8th, I put in $7,000, and then we've gotten up to March 9th, which is today. We're at $17,600 in the account. And then what we're going to do also is I'm going to talk about dollar cost averaging. A lot of people are talking about don't catch falling knives, the market's crashing or falling or dip or correction, whatever. Don't catch a falling knife. Well, on this channel, we're long-term investors. We don't catch falling knives, we juggle them. What I mean by that is we dollar cost average by investing at regular intervals. For this particular public account, it's going to be every Friday. And we're going to dollar cost average down, and we're going to get it at a better value. And over the long term, it's going to go up. I'm going to show you a specific stock that's worked for that. It's a stock that I have in my private accounts. It's also a stock that I have here in this public account. It's a great example of showing you how dollar cost averaging works. People can talk about it working, this and that, whatever, but I'm going to actually show you examples of how it worked. And on this channel, when we buy the stocks, we're also going to go through the dollar cost averaging. I'm going to show you some of those examples today as well of how they've worked so far for just some of the stocks that I've had since starting this account at the beginning of the month. Or excuse me, at the beginning of the year. Let me get my readers on here. I'm not 18 anymore. We're going to go to positions here. We're going to talk about the stocks that I bought since the last video, which was 2 weeks ago. So we'll go through here. We've got Alphabet, Google. Click on that. So since the last video, we did buy one share on the 28th, 167 bucks, and on the 7th, $173. Now, you'll notice that we're down on the Google 7%, but if you look at this, if you look at January 21st and January 31st, if you notice, down 12.9% and 15.1%. So that's 28%, right? So if you just bought those two, you'd be down 14% on average. And if you got afraid or you were fearful because the stock market was going down, you'd be down 14%. We don't do that here. We're long-term investors, and I dollar cost average. I bought at regular intervals. And we're not down 14%, we're down 7%. One of them that we purchased on the 28th, it's actually up over 3%, almost 3.5%, because we keep buying at regular intervals, and the price of it, the cost per share, you'll see here, 204, 184, 167, 173. So we're buying down, we're cost averaging down, and then when it goes back up, there's where we get our reward. Amazon, since the last video here, we bought on the 28th for $208 and March 7th for $197. If you look here, we're down 11%. If you bought on the 21st and 31st of January, you'd be down like 29%, 30% about, so 15% total if you average it out. But we're not down 15%, we're down 11%. And the most recent purchase on the 7th of March, it's actually in the green. So buying at regular intervals brings that average down. Chipotle, I didn't buy any for this account. I did buy some for my private account, however. Dutch Brothers, we didn't buy any stocks here since the last video. MasterCard is the same. We've got the one share. McDonald's is the same with the two. Meta, the 7th, we bought one share, $622. Much cheaper than the $736 we bought, 2 shares on the 14th of February. Got that one. Microsoft, we bought on the 20th of February and the 7th of March. Okay. Here's another one where you look at it, down 8%. If we would have stopped there, we'd be down 8%. Buy on regular intervals, we're actually down 4% instead of 8%, and the two most recent purchases are actually in the green. They're up. Okay, and then Palo Alto Networks, we didn't buy anything. Holte Homes, we didn't buy anything, and Walmart, we didn't buy anything. So total overall, the account's down about 5.85% since we started purchasing, And you'll see here the percent that we have in each stock. Some are weighted more than others. And then we have the cash, $2,100 in cash. That's about 12%. So dollar cost averaging, right? So I'm going to show you a stock example that's worked for me in the past. We're just going to go here to, we'll do McDonald's. The reason I picked McDonald's is about 2 weeks ago, I was talking to somebody about McDonald's, and they were saying how it was a terrible stock, this, not whatever. But if you look over at McDonald's over the long term, it's actually a great company. They pay a good dividend. They increase their dividend every year, and the stock goes up over time. So just a quick example here, Walmart, it's what, $3.21 a share. We'll look at the last 3 years. Let's just go back here to, was that August 18th of 2022? What was that? 266 bucks around the mid of August. And then it went down to, what's that, $230, and then $234 again. It's the bottom. So I've never been able to buy a stock at the bottom. I've never been that lucky. There's no way to predict where the bottom is. If you watch somebody on YouTube or talk to a specialist or friend or whoever, if they say they can predict the bottom of a stock, they're either telling the truth or they're lying. And there's a very simple way to find out if they're telling the truth. This works on every person. If somebody tells you they can find the bottom of the stock, ask them, are you a multi-billionaire? If they're a multi-billionaire, then yes, they can pick the bottom. Because if I could pick the bottom of where a stock is and buy at the bottom of the stock and ride it up, I would be a multi-billionaire. You would be a multi-billionaire. Everyone would be. So if they can't, if they're not a multi-billionaire, then they can't predict the bottom. You can get lucky and pick the bottom. I've been doing this for decades. I haven't been that lucky to pick the bottom, but I'm not interested in picking the bottom. If I buy on the downswing and the upswing and buy at regular intervals, even when it's up, I'm okay. Let me show you an example here. People say don't catch falling knives. We don't catch them. We juggle them. We juggle knives here. I'm going to show you here. So the stock's what, 247 there, 234, 230, 235, 233, and goes up. So let's say I got to get my calculator here. Let's say you're not lucky and you don't get that 230. Let's say you dollar cost average in at 250. Well, the stock's 321 minus, let's say you got the 250 and you weren't lucky enough to get down there in the 230s. You make $71 profit divided by the 250, and you're up 28% from September of 2022. But that's not including your quarterly dividends, and every year McDonald's increases their quarterly dividend. So you're up 28% plus the quarterly dividend for the last 2.5 years. And then you buy up here, and then let's look more recently at these two nice dips we had. It was in July of 23, so it was at close at 294, 291. Let's buy on the way down when people are afraid because they don't want to catch a falling knife. There's 271, 263, 257, 249, 249 again. Let's say we're not lucky and we can't catch that 249. Let's say we bought in at 255 on average. So 321 minus the 255, that's a $66 profit divided by the 255. You're up 25.8%, not including your quarterly dividends since, the October of 2023. And let's say you're buying, and then here it's going down. People are afraid to catch the falling knives, but you buy at 267 on that big drop. Let's say it drops again, big drop here, down to, what is that, 253. People are afraid that they don't want to catch the falling knife. Drops again, 254. You keep buying. Drops again, 245. Drops, goes up and comes down to 251. Let's say you're not lucky enough to get those, but you dollar cost average in at 260. Well, 321 minus the 260. You made a $61 profit divided by the 260. You made a 23.4% profit in that time period, which is less than 1 year ago. And that's not including your quarterly dividends. And then let's say, okay, October 24, it was at 314. It drops 292, down to 290, 279. But you're not lucky enough to get it at 279. Let's say you got it at 282. It went up to 290. Let's say you dollar cost averaged in here at, you didn't get that. What was that? 279. There's 280, 282, 279 right there is where it closed at. The low was 276, but you're not lucky enough to do that. Let's say you get it at 282. Let's say you get it at 285. So 321 minus the 285. You made $36 on your 285. You made a 12.6% profit. By the way, right there, if you purchased, it's January 15th of this year, less than 2 months ago. So when the people say don't catch the falling knives, those are short-term investors looking for short-term money, short-term gains. This channel is about long-term investing. It's about growing wealth, not just for you, but for your family. And the way to do that is long-term investing over regular intervals, whether the stock market's up, down, sideways, diagonal, I don't care. Have cash on the side. That way, if it does go down a lot and you love the company and you want to put even more than your regular interval amount of cash into it, feel free to do it. You've got to make sure that your income, your monthly income, is more than your monthly expenses. That way you have monthly money left over to invest at regular intervals. So you have to make sure your expenses are less than your income. Okay, whatever that is. Cut out a Starbucks coffee. On this channel, we got Dutch Bros. Don't cut out a Dutch Bros coffee. Keep doing that. Keep eating at Chipotle. Chipotle's healthy. It's cheaper. You get tons of food, but cut out, keep eating McDonald's too, please. But cut out, any other food, Chick-fil-A or Wendy's or Burger King, cut those guys out. But anywhere you can save a couple bucks, every dollar you can save today, think of it like, a dollar saved today is, $10 20 years from now. Would you rather have the dollar today or the $20, or the $10 20 years from now? I'd rather have the $10 20 years from now, personally. So this is just one example how buying at regular intervals, buying the dips, the corrections, market crash. We haven't seen a market crash yet, but it's going down. So people say don't catch the falling knives. I completely agree. Don't catch them. Juggle the knives. That's what we do here. So that's just one example of a stock that I've owned for years that's done very, very well for me. So next Friday, we'll be buying more stock, $850 worth. These are the ones that we have so far. I'm looking at a couple other stocks that I might be adding to the public account. I've got to do a little bit more research and look into those. But if you found the video informative or entertaining, I'd appreciate it if you hit the like button, share with a friend. Please feel free to subscribe. Thank you to everyone that clicked on the channel to watch. Thank you to the folks that have subscribed. I really appreciate it. It means a lot to me. I want to bring you guys more information, and I want to show you how you can take $0 and take it to $1 million. I'm going to show you every single stock trade. Some of these other channels, they talk about they're going to do this, that, and whatever, and they show you maybe a part of the trades, but not all of them. 100% transparency here. I'm going to show you every single stock purchase, and if I sell a stock, I'm going to show you every single stock sale. You will see it every single video, every single move of every single dollar on this account. I hope you guys have a great rest of your weekend, and I'll see you in the next video. Thank you.